Good morning, everyone. It is Wednesday, June 26th. My name is Lee McMahon. I'm a currency strategist here at globalfxclub.com. Here today to talk to you about Aussie CAD. I actually talked about Aussie CAD fairly recently, about a week and a half ago, on Monday the 17th. And I think that it's time for an update on that video. And I think it's time that we reconsider the possibility of Aussie CAD logs. So, please take a moment to read the risk disclaimer, which should now be on your screen, and then we'll get started. Alright, so this is a 4-hour chart of Aussie CAD. The big news that just came out was the final quarterly GDP or print, actually, at this point, not estimate. The final GDP for the U.S. For last quarter, it's of course listed as a yearly. The expectation was for 2.4, and the actual print was 1.8. So just a really, really, really big miss, especially for a final GDP print. I mean, usually the last few that we've seen missed by 1, missed by or beat by 3, missed by 4, met expectations, met expectations. All right, so missed by 6 is extraordinarily high, and really is a problem, I think, if for the Fed if they really want to start tapering. This kind of GDP miss is not going to be good for investor and consumer confidence. But it is probably going to boost the stock market and hurt the dollar, as people will expect it to limit the possibility of Fed tapering. One of the side effects of bad U.S. data is often a negative reaction from the Canadian dollar. The Canadian and U.S. economies are so intertwined, and the Canadian economy is so dependent on what's going on south of their border that often bad U.S. news is bad Canadian news. On Friday this week, we have Canadian GDP release as well, expecting a 0.1% growth after 0.2% last quarter. It'll be interesting to see whether or not this disappointing U.S. GDP print previews a disappointing Canadian GDP print on Friday. But one thing that we do know is that the Canadian dollar may begin to struggle a little bit, especially against some of the other commodity currencies with this weakness in the U.S. GDP print. So let's take a look at the technicals here. This is a 4-hour chart. I've just drawn some trend lines to show you where general resistance levels are. We breached this first one. You can see we broke above, we retested, and we headed higher. We've been consolidating really since then. We are now challenging another major trend line resistance, with one more looming back around 99. That also corresponds to the 200 period EMA here on the 4-hour chart. On the video that I made last Monday, I said that we needed a convincing daily close above 98.05 to really see this move continue. And you can see here, this is 98. This is when I recorded the video. We really failed to put in that close. We wicked above 98 twice, and then we fell back from the time I recorded the video all the way lower. Now, on the 20th, we put in another potential reversal candle, a nice hammer at the bottom, just sticking out from the bottom, so very nice potential. Since then, we've seen 4 green candles in a row, suggesting, again, higher prices likely to continue. But again, same problem. We do need to put in a convincing close above these previous highs. The other setup that, let's go back to the 4-hour chart. The other possible way to view this market, though, or this pair rather, is as the beginnings of an inverse head and shoulders pattern. All right. So we have a left, a head, and a right. Where you want to put the neckline is kind of complicated. I would like to actually just put it above these previous highs. You could try to draw some sort of trendline neckline like this, but I'd rather actually just see the pair break above this 98, really 98.20 region now, and then continue higher. I wouldn't mind seeing a little bit more right shoulder development. All right, something like that. But really just keeping my eye on these previous highs and see if we can sort of develop a better, more consistent reversal pattern than the one we have right now, which would really require just a stronger right shoulder and then a decisive break higher. We do have this 200 period EMA here on the 4-hour chart looming, so very possible that we actually break out, test this EMA, retest the neckline, and then head higher. So keep that in mind. We have cleared this 50 EMA, which you can see was resistance once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. All right, so now supportive once. So that is a good sign, I think, for Aussie CAD bulls that we managed to get above this 50 period EMA here on the 4-hour chart. We're challenging the 4-hour right now, technically above it, but not with any sort of convincing. Not with any conviction as of yet. Hourly, all right, fairly clear here on the hourly. It's a little bit of a consolidation here after this aggressive move higher. Very possible you can play that as some sort of flag break. Again, I prefer the longer term sort of inverse head and shoulders look of it. I would not be keen to get aggressively long just because we break 97.60, not with this 98 figure looming that has been so steady lately. So I'd be keeping my eye on that as well. As far as hourly moving averages go, we did actually just recently accomplish a full bullish configuration. You can see the 50 crossing above the 100 and 200 here. We just had the 100 cross above the 200. So this area right now, major support. Currently, price being held up right now by this 50-hour EMA. You can see the last 3 tests have pushed it higher. So that's also a very good sign, I think, for Aussie CAD bulls. If Aussie CAD is going to continue to rally, it's probably going to need some help from risk on sentiment. Just generally, Aussie CAD rallies in risk on environments, though it's not necessarily the case, but it certainly, I think, would help. Which may cause a problem. If we look at the 4-hour chart of E-mini futures, you can see we are approaching a very significant resistance area here. Retesting the trend line in this 50-period EMA here on the 4-hour chart. So that is one sort of fly in the ointment of this Aussie CAD long possibility. But if you play the pair as the pair, watch that 98 figure if we manage to break ahead of there. We may have then accomplished an inverse head and shoulders pattern that targets around 101. I hope that's helpful. Gives you something to look at outside of the usual dollar and yen pairs, which may prove useful as we debate Fed tapering and Japanese monetary policy. All right, enjoy the second half of your trading week, everyone. As always, if you have any questions, come on over to globalfxclub.com. I'll be happy to talk to you there. I hope you have a terrific week, and I'll talk to you soon.